So in the overnight session, the market hit the downside limit at 23.93.5, but looking at the SPY ETF, we can see that it actually tested yesterday's low, which is the equivalent of the initial support zone at 23.42.5 to 52.5. So heading into the open, we know that the overnight session has been quite weak and bearish, but now the market is again at that larger time frame inflection point of 23.42.5 to 52.5, followed by 23.15.75 to 20.75. And then we also have the minus 7% circuit breaker at 23.42.5. So today, how the market behaves at the initial support zone and at 23.15.75 to 20.75 is going to help set the bias going forward. If early in the session, buyers can still step in here at the initial support zone or even at 23.15.75 to 20.75 and then push ES back above the 2400 high volume node, then there could still be stability in this market and we can still get upside price movement. But if in real time we're seeing trend down type internals with the NYSE tick completely below zero and printing big downside values and ES liquidating and breaking down below the initial support zone and below 23.15.75 to 20.75, that would serve as a bearish confirmation, and then the market could continue to liquidate into the support areas below. Now, on the downside below 23.15.75, the next larger time frame or strong areas of support are all the way down at 22.16.75 to 24.75 and 21.90 to 2200, but considering the overnight high was 24.86 quarter and the biggest range that we've seen recently on the 24-hour session is 326 points, in the event that ES continues to liquidate and sell off, it would hit a range extreme by the 22.64.75 to 68.75 zone and 22.51.5 to 55.5. So this 22.51.5 all the way up towards the 22.64.75 area has potential to cap the downside simply because the range would be quite exhausted by that point in time. And then the bigger picture support is at 22.16.75 to 24.75 and 21.90 to 2200, but that is quite a stretch, at least on the day time frame. On the upside, we have pre-market resistance at 24.29.75 to 32.75, followed by the initial resistance zone at 24.48 to 24.58. If ES continues to reject and trade below 2400, then that would be a sign that we're still dealing with a fairly weak market. So again, the overnight session has been weak, but our short-term bias heading into today is still neutral because the market is still at this larger time frame support area and inflection point where technically buyers can still be active, but because our short-term bias is neutral, we are going to have to see how the situation develops in real time and then give more weight to that real-time intraday bias. If in real time we get a proper breakdown below initial support and below 23.15.75 to 20.75, then the short-term bias becomes bearish and ES can head lower. But if buyers hold it here and we get a breakout back above 2400, then the short-term bias would remain neutral and we could continue balancing within the recent range. So that is the market context and trade plan heading into the open. Let's see how the market responds to the initial support and the 23.15.75 to 20.75 area and how the situation develops in real time, and we'll take it from there.